Everyone's arguing about 50-year mortgages and portable loans, but the real problem isn't your mortgage, it's that America is missing millions of homes. I'm Sean Smith with Smith Property Partners, a leading real estate team here in Chattanooga, Tennessee. And today I wanted to touch on affordability and these crazy news headlines. So let's unpack what's really going on. First, I wanted to give you guys a quick history lesson. The 30-year fixed mortgage that we all treat as normal is actually kind of a New Deal science project that never went away. Before the 1930s, most mortgages were short-term, 5 to 10 years with giant balloon payments at the end. When the Great Depression hit, people couldn't refinance or pay off those balloons and the housing market collapsed. So the federal government created new agencies, the Homeowners Loan Corporation, the FHA, later Fannie Mae, to spread payments out and make homeownership more stable. And that's how the 30-year fixed became the default. It made payments smaller, more predictable, and Fannie and Freddie standardized and backed those loans so lenders were willing to offer them. Fast forward to today, more than 90% of U.S. mortgages are fixed rate, and the 30-year is still king of the hill. Now, here's where it gets interesting. During the pandemic, we basically gave out golden tickets. Mortgage rates dropped under 3% in 2020 and 2021, hitting a record low around 2.65%. The result? According to federal data, almost 60% of active U.S. mortgages have an interest rate below 4%, and well over 70% are below 5%. In other words, a huge chunk of homeowners are incredibly locked in to cheap money. So when today's rates are hovering around like 6 or 7%, moving feels like going from $1.99 gas to $5.99 overnight. You might want a new house, but you really don't want a new rate. Economists call this the lock-in effect. Owners with sub 4% loans feel stuck, so they don't list their homes. Inventory stays low, prices stay high, and buyers get squeezed from both sides. High prices and high rates. Enter the 50-year mortgage and the portable mortgage. So, what is the Trump Pulte 50-year portable mortgage idea? Well, right now, under the current Trump administration, they're trying to solve an affordability crisis. The housing conversation's being driven a lot by Bill Pulte, which, if you don't know who he is, he's the grandson of the Pulte Group home building founder and now the director of the Federal Housing Finance Agency and the director of Fannie Mae and Freddie Mac. Pulte and Trump have floated two big ideas to fix affordability. Number one, 50-year mortgages, which stretch the loan from 30 to 50 years, so your monthly payment drops. And number two, portable mortgages, which instead of paying off your mortgage when you sell, you'd be allowed to take your existing loan rate with you to the next house. They're pitching these as game changers for first-time home buyers and locked-in owners. Now, housing experts like me are divided, to put it nicely. Many experts are calling the 50-year mortgage a Band-Aid that doesn't really fix the real issue, a massive housing supply shortage. They point out that you'd build equity more slowly and could end up paying for a house well into retirement. That is, if you actually kept a house more than 5 or 7 years, which the average American homeowner doesn't. Portable mortgages, on the other hand, are getting slightly warmer reviews. The basic idea isn't new. Other countries have forms of them, and we already have assumable mortgages here in the U.S., mostly government-backed loans like FHA, VA, and USDA loans that a buyer can take over. But portability is a little bit different. Instead of a buyer taking your loan, you take the loan to your next house. Think of it like taking your 3% rate with you like airline status, instead of starting from scratch every time you move. FHFA is actively studying what a U.S. version might look like. So that begs the question, would portable mortgages actually help? Short answer, they help with mobility, but they don't magically fix affordability. Here's what they could do. First, unlock more listings, which we desperately need. If I can move my 3% mortgage to the next house, I'm more likely to sell my current one, and I think you would be too. That could put more resale inventory on the market and help with the freeze up we're seeing right now. Second, could reduce that psychological rate shock. People hate going from 3% to 7%. Being able to keep your old rate on at least part of the balance softens that blow. And third, it makes moving for jobs easier. A portable mortgage can make people more willing to relocate, which is good overall for the economy. But here's the catch. If you make credit cheaper or more flexible without building more homes, You mostly bid up prices. We saw versions of this when rates dropped in 2020 and 2021. Super cheap money plus not enough homes equals bidding wars and huge price jumps. Portability could actually make low rate loans more valuable, which might push prices even higher on homes tied to those loans, at least in the short run. And lenders, investors, and regulators have to figure out all the boring but important stuff, like how do you hedge a loan that moves houses, how do you underwrite the new property, and who eats that risk. So portable mortgages might grease the gears of the market, especially for people trapped in their current home, but they don't build a single new front door. The real villain in the story is we're millions of homes short. This is the part on cable news nobody wants to talk about because it's not as catchy as a 50-year mortgage, but it's the heart of the issue. Depending on who you ask, the U.S. is short somewhere between 3.8 and 5.5 million homes, and that's the range from organizations like Zillow and the National Association of Realtors, and Realtor.com estimates the supply gap was close to 4 million homes in 2024. And because we underbuilt after the 2008 crash, we've been playing catch up for over a decade, and in recent years, we've added around 1.3 to 1.4 million new units per year, while household formation, which is people moving in together and people getting married and deciding to buy a house, it's been closer to 1.8 million. And that math never works in the buyer's favor. That's why 2024 existing home sales fell to the lowest level since the mid-1990s, and median home prices hit all-time highs, over 400,000 nationally and almost 360,000 here at home in Chattanooga. So yeah, rate tools and mortgage gimmicks matter. But if you don't fix the supply, you're basically rearranging chairs on the Titanic. What should the government actually be doing? Well, here's where I'd pivot from what Trump and Pulte are pitching to here's what really moves the needle. At every level, local, state, and federal, we need policies that make it easier and faster to build. At the local level, they can loosen zoning that only allows one house on huge lots. They can legalize more missing middle housing like duplexes, fourplexes, townhomes, and ADUs, and streamline approval projects so they don't die in a permitting process. At the state level, they can tie infrastructure dollars like road, utilities, and transit to cities actually allowing more housing. They can offer tax credits or fee reductions for projects that add units in the price ranges where shortages are worst. And at the federal level, they can target incentives for builders, not just buyers, for example, credits or guarantees for adding new net units in undersupplied metro areas. They can expand and modernize programs that support workforce and starter housing, not just high-end or luxury projects. And they can align Fannie and Freddie products with supply goals, for example, making it easier to finance small-scale infill and missing middle developments. If you combine that kind of supply-side push with smarter mortgage tools, maybe some form of portability, better support for assumable loans, and responsible long amortization products in limited cases, you get a path where more people can move because they're not handcuffed to their rate, yet more homes actually exist for them to move into, and over time, price growth cools because supply finally starts catching up with demand. So yeah, 50-year mortgages and portable loans make for great headlines, but remember, almost 60% of homeowners are locked into rates under 4%, and we're short millions of homes nationwide. Until we fix supply, we're just designing fancier cages for people who are already trapped in their house. The real solution is building smarter, faster, and in the places people actually want to live. Would you take a 50-year mortgage if it meant a lower payment but slower equity? And if you've got a sub 4% rate, what would it take for you to actually move? Drop your thoughts in the comments. I'm genuinely curious how you're thinking about this.